Ladies and gentlemen, welcome back to another critical update from Crypto Hub. The cryptocurrency markets are once again at a pivotal crossroads, capturing the attention of investors worldwide as fresh technical patterns and on-chain metrics suggest a potential shift in momentum. After months of consolidation and corrective pressure following last year's peaks, signs are emerging that Bitcoin, Ethereum, and XRP could be flashing massive reversal signals, hinting at a renewed bullish phase. Is the crypto market truly turning bullish again, or is this another false dawn in a volatile cycle? Today, we dive deep into the data, technicals, and broader narratives shaping these assets to separate fact from speculation. Hello, everyone. This is your host at Crypto Hub, where we deliver professional, data-driven insights into the ever-evolving world of digital assets. In this comprehensive analysis, we examine the latest price action, key indicators, and fundamental drivers for Bitcoin, Ethereum, and XRP. With Bitcoin hovering near the $80,000 level after climbing from recent lows around $63,000 to over $80,000 in recent months, the stage is set for a decisive move. Ethereum continues to show resilience around the $2,200 zone, while XRP trades near 1.45 amid regulatory optimism and technical setups. We will explore these developments in detail, weighing bullish reversal evidence against potential risks so you can navigate the market with clarity and confidence. Let us begin with Bitcoin, the undisputed leader of the cryptocurrency space whose movements often dictate the broader market sentiment. As of mid-May 2026, Bitcoin is trading in the vicinity of $79,000 to $81,000, having demonstrated notable recovery from lower supports earlier in the year. This rebound has not gone unnoticed by analysts, with several on-chain and technical signals pointing toward a potential bullish reversal. One of the most compelling setups is the formation of a narrowing triangle pattern on shorter timeframes, indicating building tension that could resolve with a strong breakout. If Bitcoin successfully holds key supports around $80,500, $79,400, or even deeper at $77,800, and rejects downside probes with bullish price action, it could catalyze upward momentum toward resistance zones near $82,000 and potentially $85,000. Delving deeper into the technical landscape, Bitcoin's recent price behavior aligns with historical patterns observed during previous cycle recoveries. After reaching all-time highs above $126,000 in late 2025, the asset entered a corrective phase amid profit-taking, leverage flushouts, and shifting macro conditions. Yet multiple indicators now suggest the correction may be maturing. For instance, Bitcoin has reclaimed important cost basis levels for short-term holders, a development often associated with capitulation exhaustion and the return of buyer conviction. Funding rates in futures markets have moderated to neutral territory, reducing the risk of cascading liquidations while allowing organic demand to build. Additionally, options positioning is turning more supportive, with flows indicating traders are preparing for upside rather than further downside. On-chain data further bolsters this narrative. Reports from firms like Wintermute highlight shrinking available supply on exchanges and accumulation by large players, often referred to as whales. A decisive breakout above the $82,000 psychological and technical barrier could mark the first clear sign of a 2026 trend reversal, shifting the market structure from range-bound consolidation to a renewed uptrend. Conversely, failure to hold the ascending trend line within the current triangle could invite retests of lower supports, but even in that scenario, the overall higher-low formation since the $63,000 area preserves a constructive, longer-term outlook. Moving to momentum oscillators, the Relative Strength Index, RSI, on daily and weekly charts has been hovering in neutral territory around the 40 to 55 range, avoiding deeply oversold conditions that often precede sharp rebounds. This positioning leaves room for upside expansion without immediate overbought risks. The Moving Average Convergence Divergence, MACD, indicator is also showing early signs of bullish crossover potential on higher timeframes, particularly if volume accompanies the next leg up. Traders are closely watching the 50-day and 200-day moving averages. A golden cross confirmation or sustained trade above the 200-day MA near $83,000 would provide strong technical validation for bulls. Fundamental drivers are equally important in assessing Bitcoin's prospects. Institutional adoption remains a cornerstone, with spot Bitcoin ETFs continuing to attract inflows despite periodic pauses. These vehicles have democratized access for traditional capital, absorbing supply and providing a steady bid under the market. Macroeconomic factors, including potential Federal Reserve rate adjustments and global liquidity conditions, also play a role. As inflation metrics stabilize and growth concerns linger in some economies, Bitcoin's narrative as a store of value and inflation hedge regains traction. Moreover, the halving cycle dynamics from previous years continue to exert their influence, with reduced new supply issuance supporting scarcity-driven appreciation over time. However, no analysis would be complete without acknowledging risks. Bitcoin remains sensitive to broader risk asset correlations, geopolitical developments, and regulatory headlines. A failure to break higher could lead to prolonged consolidation or a deeper retracement toward the $70,000 $75,000 zone, where strong historical support clusters exist. Long-term holders have shown resilience by accumulating during dips, but retail sentiment can swing rapidly. Professional investors emphasize the importance of position sizing, risk management, and avoiding emotional decisions amid headline volatility. For those building portfolios, dollar cost averaging into strength or weakness remains a disciplined strategy aligned with Bitcoin's historical outperformance over multi-year horizons. Shifting focus to Ethereum, the second largest cryptocurrency by market capitalization, we observe similar reversal cues amid its own unique ecosystem developments. ETH is currently trading around the $2,200 to $2,300 range, having navigated a descending channel and shown signs of stabilization after testing key supports near $2,100. Analysts point to a potential bullish reversal hinging on reclaiming important resistance levels, such as the $2,500 to $2,700 zone, which aligns with moving average clusters and prior price congestion. A confirmed breakout from recent patterns, including inverse head and shoulders formations on intraday charts, could open the door to measured moves targeting $2,800 or higher in the near term. Ethereum's strength derives partly from its foundational role in decentralized finance, non-fungible tokens, and Layer 2 scaling solutions. Network upgrades continue to enhance efficiency, reducing fees and improving throughput, which supports greater adoption. Whale accumulation has been noted in recent periods, with large holders reaccumulating tokens during dips, signaling confidence in future utility. Exchange supply has also trended lower, reflecting a preference for self-custody and long-term holding over immediate selling pressure. These dynamics mirror setups that preceded prior rallies, where reduced liquid supply met rising demand from developers and users. Technically, Ethereum's RSI and MACD indicators provide mixed but watchful signals. The RSI around neutral levels suggests momentum is not yet exhausted, allowing for potential expansion on positive catalysts. Bullish divergences have appeared on shorter timeframes, where price made lower lows but oscillators formed higher lows, an early warning of waning seller control. Support holds firm near $2,100 to $2,160, while resistance clusters around recent highs and Fibonacci retracement levels from the 2025 peak. A sustained move above the 50-day moving average could shift the bias firmly bullish, encouraging altcoin rotation as Bitcoin stabilizes. Broader narratives around Ethereum include the potential for improved ETF flows and institutional products. As regulatory clarity progresses globally, ETH's staking yields and DeFi dominance position it as a yield-bearing asset with real-world utility. However, competition from newer Layer 1 chains and scalability challenges remain factors to monitor. Ethereum's correlation with Bitcoin is high, meaning a BTC breakout would likely lift ETH disproportionately due to its beta characteristics. Investors should watch for volume confirmation and on-chain metrics like active addresses and gas usage as leading indicators of genuine demand recovery. Potential headwinds for Ethereum include macroeconomic tightening or delays in network developments, but the asset's resilience through multiple cycles underscores its long-term value proposition. For traders, key levels to monitor include a hold above $2,100 for neutral to bullish structure and a decisive close above $2,500 for acceleration. Risk management remains paramount, with stop losses placed below recent swing lows to protect capital in case of unexpected volatility spikes. Now turning to XRP, Ripple's native token has been generating significant buzz with its own set of reversal signals that echo powerful rallies from the past. Currently trading near 145, XRP has shown strength with gains of around 27% in recent periods, while funding rates remained negative, a setup reminiscent of conditions before its 126% surge in prior cycles. This divergence between price appreciation and bearish sentiment in derivatives markets often signals smart money accumulation amid retail caution, setting the stage for potential short squeezes and momentum shifts. Chart patterns for XRP include double bottom formations and potential breakout flags, with analysts highlighting supertrend buy signals on daily charts, the first in several months. A clear move above $1.50 could confirm a structural trend shift from bearish to bullish, targeting 190 or higher in the short to medium term. Key supports sit near 135-140, where whale buying interest has historically emerged. On-chain data reveals rising burn rates, institutional holdings by firms like Bitwise, and growing utility in cross-border payments, all reinforcing XRP's fundamental appeal. Regulatory progress, including potential outcomes from legislation like the Clarity Act, adds another layer of upside catalyst. Clarity around Ripple's operations could unlock greater adoption by traditional financial institutions, expanding use cases beyond current levels. Technical indicators such as MACD showing buy signals and RSI in neutral territory around 50-55 provide room for upside without immediate exhaustion. Volume profiles indicate accumulation zones near current levels, suggesting limited downside risk if broader market conditions remain supportive. XRP's lower correlation with pure Bitcoin cycles at times allows it to outperform during alt-season phases, particularly when regulatory tailwinds align with technical breakouts. However, risks persist, including legal overhangs or broader market corrections that could drag it lower temporarily. A pullback toward $1 or $1.30 might even offer healthier basing for a stronger subsequent move, as seen in historical precedents. Long-term holders point to XRP's speed, low costs, and real-world partnerships as enduring strengths that differentiate it within the altcoin space. Zooming out to the broader crypto market, the interplay between these major assets is critical. Bitcoin dominance remains a key metric. A declining dominance often coincides with capital rotation into Ethereum and XRP, fueling altcoin rallies. Total market capitalization has stabilized after corrections, with sentiment indicators improving but not yet euphoric. A healthy environment for sustainable growth rather than parabolic blow-offs. Global liquidity, institutional inflows, and technological advancements collectively support a constructive backdrop, though external shocks from equities, bonds, or geopolitics could intervene. In synthesizing these insights, the evidence for a bullish turn is compelling but not guaranteed. Massive reversal signals across BTC, ETH, and XRP, ranging from pattern breakouts and indicator alignments to on-chain accumulation, warrant close attention. Bitcoin's path toward 85,000, 90,000 plus, Ethereum reclaiming $2,500, $3,000, and XRP pushing beyond 150 $2 represent plausible scenarios if key levels hold and catalysts materialize. Yet, disciplined analysis demands preparation for all outcomes, including extended consolidation. Investors and traders should prioritize verified information, utilize multiple timeframes for confirmation, and maintain balanced portfolios. Tools like RSI for momentum, MACD for trend shifts, support resistance for entry-exit planning, and on-chain metrics for conviction provide a robust framework. Avoid over-leveraging in uncertain environments, and remember that crypto markets reward patience and continuous learning over short-term speculation. As we conclude this detailed market update, the crypto landscape continues to evolve rapidly, blending innovation, adoption, and cyclical dynamics into a powerful investment thesis for those who approach it thoughtfully. At Crypto Hub, our commitment remains delivering timely professional analysis to empower your decisions in this exciting space. Whether you are accumulating on dips, monitoring breakouts, or simply staying informed, we appreciate you joining us today. Stay vigilant, manage risks wisely, and we look forward to bringing you the next in-depth report soon. This has been your update from Crypto Hub. Until next time, trade smart and invest responsibly.